Welcome to Focus Today. I'm your host, Perry Atkinson, and what a delight and an honor to have back with us Dan Celia. He's CEO of Financial Issues Stewardship Ministries and radio talk show host and also television host. By the way, as soon as we can get our bugs worked out, you're going to see the Dan Celia show, Financial Issues, on the theDove television network. And hopefully in the next week or so, we'll get those bugs worked out. So sorry for the delay, Dan, but we welcome you to the family, buddy.
Well, I'm happy to be a part of the family, and I can certainly wait. It's a great opportunity to be able to serve a great audience. So we're excited about being a part of the theDove.
All right. Hey, listen, big news, obviously. Last week, Britain pulls out of the EU. The financial markets are really reacting to it. The Dow was down over 600 points on Friday. It's down about 3.25 points now. Your thoughts?
Well, it was very much a surprise. I don't... a black swan event, you hear that term every once in a while when we talk about the financial markets. And a black swan event is something that is totally unexpected, that comes out of nowhere. I wouldn't classify this as that, but the polls were all dramatically leaning towards they weren't going to leave. They were going to stay. And, of course, that caught everybody by surprise. They are out now. They've got 2 years to work this exit plan out, and it has created, mostly in the financial markets in London, in the EU, and that has impacted the U.S. But it's uncertainty, Perry. Like, nobody knows how this is going to end. I think it's going to end very well. I think it's going to be good for certainly good for the Brits. And I think it's going to be good in the long run for the Eurozone. The reason why we see markets act so violently and volatile on the downside is people are expecting a worst case scenario, which I'm kind of in the camp too. I said before the vote that if this happens, it could very well be the beginning of the end of the Eurozone, because we know the German people have been wanting out for the last 3 years. The French people, 70% on Friday evening said they wanted out. That's the people. The government and the people of Holland said this is our chance to move out. I suspect there's going to be more of that. And that's the real problem. I mean, you've got two of the largest economies in the Eurozone, Germany and France. Now, are they going to be considering this? And that'll be the end of the Eurozone if that happens.
All right, a couple of things come out of this, Dan. Again, you make mention where all the polls said that they were going to stay in. In fact, the BBC was inundating the people. I mean, if you ever seen the BBC and listened to the BBC, which controls the media over there, yep, they're just pounding the people to stay in, and yet the people said no, which is a huge deal. And I've seen up as 5 other countries may come out. Do you think that the UK coming out and sticking with the pound enabled them to come out?
Oh, no doubt about it. No doubt about it, Perry. I mean, what this is going to show is Switzerland, the UK, and Poland are going to be the 3 countries that are going to deal with even the problems at hand in the market so much better than everybody else because they're not on the euro. And so they're going to be a little bit more nimble and able to control a little bit more of their own destiny. And, that was a very good move many years ago. They took a lot of criticism. When they said they were not going to go on the euro currency, their economy was going to collapse. People were going to move out. The world was going to come to an end. And I think that gave the British people some notion that, wait a minute, we've heard this song sung before. Nothing happened. It turned out to be a good thing. And I think that helped them get the votes. And I do listen to BBC every single morning, very early in the morning, to see how the market's going to open over there. And you're right, they were just pounding this thing, and so wrong. And so this is a real feather in the cap for the outsiders in politics, even here in America, that are saying we've got to get this country back to the people where it belongs. And I think even the people in America are paying attention.
I want to get into that aspect of it because it certainly plays into the Trump campaign. But first of all, in the economic impact on the U.S., we're seeing it in Wall Street this morning. Do you think this thing will kind of settle down by the end of the week or so?
I think it'll settle down by the end of the week. I think the only thing that is going to keep it from getting any kind of bottom in or everybody relaxing a little bit is going to be if our banks here that are getting hit hard right now, if they continue to get hit a lot worse than what everybody had anticipated. Because our U.S. banks and our financial sector here have said, oh, well, this is not a big deal. We don't have that much exposure. That's not true. They have significantly more exposure than they've let on to everybody here. So if they continue to drop, the financial sector is about 27% of our markets. That is very significant. So if they continue to drop a lot more than is expected, then this thing could last a little bit longer and start to have a bigger contagion effect on some of the other big companies.
There's a phenomenon this morning, Dan. Maybe you can help explain it. Gold is up, and so is the dollar. You usually don't see them both up at the same time. What's that all about?
Yeah, I mean, that is because gold right now, what happens is it's not reacting to the higher dollar because the safety trade, people flocking to gold, is outweighing the value of the dollar going up right now. So it's just a situation of volume moving into gold as a result of it being perceived safety. And that's what is driving gold up. It's just sheerly that volume.
All right. They're saying other precious metals, silver, platinum, may be going up. Is that permanent or temporary?
Same. No, it's temporary. In my opinion, it's temporary. I don't think it's going to. I think it's going to last as long as the markets are going down. So when the markets begin to recover up, they will likely recover back down. I think our biggest concern is going to be oil. Oil's the thing we really have to watch closely. We don't really want to see oil drop below 43.50 in that range, 43. Some are saying 44, but we don't want oil to break that level again. So that we'll watch a little bit closer. And it looks like it certainly could at the rate we're going.
There's rumors now that maybe 3, 4, 5 other countries may come out of the EU. We'll have to wait and see. But the one that could be a little bit of a game changer is the unsettledness in Scotland. What's your take on that? They tried to come out. They realized they didn't have a currency or a military, so they stayed with Britain. Well, where does that leave them now, and how big of an impact would that be?
Well, it's interesting now because Scotland is saying, so Scotland wanted to break away from British rule. They wanted their own rule. And then, as you already mentioned, the military and some other things said, well, that's not a good idea. And they lost that vote. Well, now they're saying, wait a minute, we're getting punished because we want to stay in the EU. We just want to be away from Great Britain. But now because Great Britain has voted to be out, we're out. Well, we don't want to be out. This is going to hurt our economy by being out. So the whole Scotland thing is going to be very, very interesting to watch. You know, they do want to be away from the UK. They don't necessarily want to be out of the EU, but they're out. When the UK's out, they're out.
Well, that's going to be interesting because they'd have to come up with a currency and put value to it. And what do they have to substantiate a currency?
They don't. So they can't do it.
So a golf course? Another golf course?
Lots of and some magnificent scenery and some great old churches. But anyway, it is what it is. They're stuck. They're not doing anything.
All right, let me take a break here. We'll be back with Dan Celia, by the way, Financial Issues. And the name of his ministry is Financial Issues Stewardship Ministries, FISM. And you'll be seeing his program coming up on the Dove television soon. We just got a few technical things. Once we get that straightened out, you'll see him on a regular basis. Let me take a quick break. We'll get back into the political aspects of all of this with Dan in just a moment.
I'm Paulina Leiser, producer of Focus Today. Thank you for watching this video, and make sure to check our other videos at theDove.us.
Welcome back, and what a delight to have with us today Dan Celia. He's the CEO of Financial Issues. You can go to financialissues.org is his website, and soon you'll be seeing his television program daily here on the Dove, and we are honored to hook up with him and connect and partner with him. And the name of his ministry is Financial Issues Stewardship Ministries, FISM. But again, go to this website, financialissues.org. Well, Dan, all of this uncertainty, it's been said that this election cycle in America is the people versus politicians. And what we saw in Europe was the people fighting back, taking back. They didn't want to answer to Brussels or have Brussels tell them how to live. And we really don't want our government to tell us how to live. This all plays into Donald Trump's campaign. Do you think so? I mean, do you think that's true?
Oh, absolutely, Perry. I think this plays into the Trump camp very, very well. This is why Donald Trump is the nominee, because the people have spoken. He is, he is appealing to the middle class of America that is saying we're tired. We're tired of this. We know we don't have jobs. We know that we don't have wages going up, and we know that we're losing ground every day. And I don't know. I know you have many times, Perry. I have many times heard people call in or talk about, I've written letters and I make phone calls and they just blow it off. My legislators blow it off. They don't really care. Nobody's listening. They do whatever they want. And that has been very typical of Congress now for the last 10 years. They want to believe that they work for somebody other than the people that elected them and that pay their salary. And they have been acting on their own as if they know what is better for us, when the reality of it is they know what's better for their special interest. And I think people are just fed up, and as we should be. We're a republic. We hire them to represent our desires and wishes and what we know is happening on Main Street, and they are to represent us. That's what a republic is all about, and they haven't been doing it. And Donald Trump has resonated with that. I think Bernie Sanders has resonated with that on the other side, on the far right side of things, but nonetheless not being part of the political establishment. And we are in an environment where the people have had enough. And frankly, I don't know what Republican establishment is going to do, and they don't know what they're going to do.
Yeah, it's very interesting. Now, how much of this do you think this pushback is driven by the economy, which obviously would be the employment status? And do you think people really process through their brain, Dan, what a $19 trillion debt really is and what it could mean if it gets into the $22 to $23 trillion range? Do you think people are starting to process that?
I think they are processing what they've heard, which it's very, very dangerous. They've heard that it's going to be on the back of their children and their grandchildren. I think that they've processed that. Unfortunately, I don't think too many people understand how big a trillion is. I don't think our Congress understands how big a trillion is. And so they have processed it enough to know that it's very dangerous. And they know that we've got to somehow begin to unwind all of that. And it is, as you said, it is about jobs. It is about the economy. You know, you can say all you want. You can take victory laps if you want. But we have 95 million working age people out of work, 95 million. And they are not all sitting, you know, on the beach or playing golf. They're not all retired. As a matter of fact, according to the Bureau of Labor Statistics, the government's own numbers, the majority of the people that are discouraged on working out of the labor participation rate are from the ages of 25 to 55, not from the ages of 55 to 65 or older. So that is the biggest demographic that has been impacted the most. And so we have seen the middle class, you're close to Washington, California there. And when you look at the minimum wage issue, my argument with the $15 minimum wage is that one of my arguments, I have lots of them, but one of them is that the politicians on the left say that people can't raise a family and live on this minimum wage. But everybody else is saying, well, wait a minute, you're missing the point. That's not what it was intended to do. It's not intended to raise a family. It's not intended to be a career. It's intended to be a stepping stone. But the left has decimated the middle class. They have destroyed opportunities in America to move up. They've knocked half the rungs of the ladder. They've knocked them out. So now we want to raise the minimum wage because it's the only way they can raise a family, because a lot of people are going to be on minimum wage for a long time because there's no opportunity that there was. And we have seen that erode away over the last 15 years in dramatic fashion. And it's continuing to do that. And that's been stepped up in the last 10 years. So, that's not the answer. It is proven that it is going to hurt the very people that it's intended to help. So I think that the American people have come to the conclusion that what we need is growth in the economy, period. We need opportunity. And that's what's going to get us ahead.
All right, let's just jump ahead hypothetically for a moment. Let's say Trump does become president. Notoriously, after the election, the economy, the interest rates go up, the economy gets really tough that first quarter, maybe 2 quarters of a new administration. If you had Trump's ear for a moment, what would you tell him to do economically the first 100 days that he's president?
I would tell him that the very first thing he's got to do when he's president is, and I would say in the first 20 days of his presidency, he has got to make the proclamations of what he is going to do to fix the economy with detail, not generalizations. He's got to say, I have surrounded myself with these 10 people, whoever they are. These are my economic advisors. This is my team. We are moving forward with this particular tax reform, with this particular incentivizing corporations to grow, with all, with the regulatory burden being changed or diminished. We will get rid of Dodd-Frank. We will do certain things, and this is how we're going to do it. That's the very first thing he's got to do, because it doesn't matter, Puri, if it takes 2 years to trickle down into the economy, all these changes. It doesn't matter. Just with the mere mention and the detail of those things being laid out, we will see the economy immediately begin to turn around, because corporate America has got $4 trillion on the sidelines, and they will start investing in America immediately, just knowing that those things are coming and feeling confident that they're coming. So that's the very first thing from an economic standpoint that he's got to do to get rid of the uncertainty.
All right, let's flip forward to the other hypothetical. Let's say Hillary's president and none of the economic policies of Obama changes. What happens to us?
We're toast. Listen, here's what I said. I was speaking at a conference a couple of weeks ago, an investment conference, and most of these very, very big time managers, and I was speaking 2 days. Most of them were, managing $500 billion. These were very large managers in the country, and most of them were saying, "Well, we think Hillary is going to be better for the economy because she's certainty, and Donald Trump is uncertainty, and the markets hate uncertainty." Well, the last time I was speaking at the end of the week on Friday, I said, "Look, you guys got it wrong. You're living in the 1980s where I'm with you. We understand uncertainty is not good for the markets, but here's what you're missing." The uncertainty of Donald Trump is better than the certainty of Hillary Clinton, because the certainty of Hillary Clinton is 4 more years of what we have. It's an extenuation of the Obamonomics that has gotten us where we are. That's the certainty that you think is going to be better for the economy. And I said, you're all wrong. You're wrong. It is not better. It is the worst thing that could happen for the economy. So the beauty of Hillary Clinton, in a sense, is we know what we're getting. We know she has already said over and over again that she is 100% on board with everything this president has done, and embraces it and goes along with it and wants to do more of the same. So I think the certainty of that is going to mean that we are headed into a country to the likes of which we've not seen, other than looking at some countries in Europe and in Western Europe and those kinds of things, because that's where we're surely going to end up.
Wow. All right, Dan, I hate to do this to you. I only got about 2 minutes left. What do you suggest people do with their finances between now and the first 2 quarters of a new administration, whoever it is? Stay in cash, stay liquid? What are you recommending?
I would say stay in preservation mode. And what I mean by that, Perry, is you don't have to have 100% of your money in cash. That's fine. But you need to have a significant portion in cash unless you're, in your 30s or younger. But for the most part, you need to have some cash for 2 reasons. One is if you're over 55, you want to preserve the majority of what you have. So you want that cash. And if you're younger, you want to have cash to be able to move into the markets when things really get bad or a lot worse. So that'll help you in that regard. But I think we have to have a preservation of our capital mentality. And that's where we all need to be right now. And that means when the market goes up because of the false positives that we could see again, you've got to be able to sit tight and be disciplined and say, you know what? Another 6 months is not going to kill me. I'm just going to keep my powder dry, and I'm going to maintain the majority of what I have in a cash position.
Wow. Thank you, buddy. Thanks for your time. I know we snuck in there and took a little extra time. Thank you, friend. And I want to say we welcome you to the Dove television lineup. We'll get it on probably in about a week or so. To our viewers and listeners, you can go to financialissues.org. That's Dan's website, financialissues.org. Thanks, buddy. Look forward to many times together.
Thank you. I'm looking forward to it.
All right. God bless. We'll be right back.